The crypto and stock markets are rallying. Stellar itself is even seeing a massive pump here in the last 24 hours. Will this rally continue, or will the Fed's action on Thursday crush our hopes of getting out of this crypto winter? Banging and wanging this Monday morning, and you wake up and see some super green heat map. Bitcoin broke 17,000 overnight at 17,200. ETH over 1,300, 1317. We have XRP highlight of the show, 35.1, with XLM seeing a big move to the upside right at that 8 cent mark, 7.9, up 5.77% last 24 hours. So you're asking yourselves, what is causing this to happen? Well, everyone, it all has to do with China reopening. Futures rise on China's reopening optimism, easing rate hike worries. U.S. stock index futures edged higher on Monday on optimism around China reopening its borders, while signs of cooling in the labor market boosted bets of a slower pace of rate hikes by the U.S. Federal Reserve. The S&P and NASDAQ snapped 4 weeks of declines on Friday, and we've seen it here over in the crypto sphere, as some of our favorite cryptos out there are starting to make moves on the upside. Here's the chart of XLM, and here's the chart of XRP. Now take note of that purple arrow. We'll get to it here really soon. The U.S. Department of Labor's Consumer Price Index report is expected to show price increases by 6.5. Told you so, everyone. I've been calling it now for the last several weeks. We need it to hit 6.5. If we are under 6.5, the rally will continue. If we are above 6.5, look for any gains that we've made here in the near term to be brought back down. Although U.S. job figures came in above expectations for the end of last week, suggesting the labor market is still tight. Nice. Investors seem to have focused on wage growth coming in slightly below what had been penciled in. All right, the wage thing is pretty interesting to explain. So if wages aren't coming down, that means people have more money per hour that they work. If companies know this, what are they going to do? They're going to keep prices high. If you keep prices high, that affects CPI data related to the consumer part of things, okay? If wages start coming down, that means the amount people are getting paid per hour, the amount that people have in their pockets is less and less and less, which means they can't afford the items that are priced so high, which means the demand of it would start pulling it down. Again, supply and demand is how the economy works. So now we're not only looking at employment, but we're looking at wages, right? The people that are employed, is it still super high wages? During the Rona, wages for some industries spiked as much as 20 to 25% during that time period. Here's a chart of the CPI data to show you the trend. We did peak in June with 9.1. Like I said, here was previous months, November at 7.1. December's information comes out here in just a few days, January 12th at 8:30 a.m. Gonna have a live stream regarding it. Make sure you hit the subscribe button so you don't miss out. But we do have some concerns, everyone, and the reason we have some concerns, again, it has to do with the Fed. The Fed can crush this, and that's why Thursday is so pivotal. Markets are going to get rocked as Fed is likely to push rates higher. Benchmark rates, all right, how high they're going to go to in order to get things back down to 2.0. Because remember, that's what you need to see on this blue chart right here. You need to see this get back down to 2.0. And a lot of you out there watching going, Klaus, that 7.1 to 2.0, that seems like a far cry away. It's really far away. You have to zoom out to the 5-year. As you can see on this chart, it did hit 2.0 before the Rona. Then you could see it went way under as the Fed had a super low rate, make money cheaper, which inflated the crypto and stock markets. So what you're seeing is the Fed still has a lot of action left, and we need to see these lines come down even faster. But the fear here is that all risks are on the upside. A rate of 5.5 is the minimum. Last month, the Fed raised the top end of its benchmark rate to 4.5. Now remember, the Fed has always been behind, and that's what they're saying in this article, is that the Fed still does not understand how strong inflation is and how long it's going to last. Remember when the Rona stuff happened and the Fed was like, you know what, inflation is transitory, it's going to be here super fast, and then it's going to be gone super fast. Well, no, that's actually not what happened. Inflation went up way higher than the Fed predicted, and because of that, they had to go really aggressive. Remember with the 75, 75, 75, and 50, 50, 50. Remember that stuff? That's exactly the problem here. Everyone out there is thinking that the Fed is behind on rate hikes, and the reason they're behind is because they don't want to panic the market and say, yo, things are really bad, because then that could easily put us in a recession. The other thing that's going to keep us us out there thinking that, hey, this short-lived rally right here with XLM and with XRP, the reason it's going to be a short-lived rally is we have earnings coming out this week from several banks, which banks have a lot of power in the market when it comes to, you know, how much huevos they got, okay? A lot of control, a lot of pull. They're expecting bank earnings to be horrible. Well, it's obvious why bank earnings would be horrible, but the bad earnings for banks could bring the markets down even further, along with Jerome Powell and the Fed seeing a nasty CPI data. Best case scenario, we need CPI to be under 6.5. Plain and simple. It doesn't get any easier than that. Right now, that's the biggest thing we're all looking for. My fear right here is that this action right here, okay, and I'll zoom out just so you can see it, that this recent action we've seen right here, this is just pre-CPI data pump that's just going to get washed out. That's just my feelings on this. Why? Because look at this. Here's the amount where we were right here in the purple arrow before CPI data hit. We were above that 8-cent mark, 8.184, 8.2, 8.3, right around that range, okay? So realistically, what are we rallying to? We're rallying to when the last CPI data came out. My feeling is, again, if that CPI data is bad, you're going to see XRP, XLM react heavily to the downside again, because that would mean that Jerome Powell and the Fed have to be even more aggressive than what they've said with rate hikes. And if we look at the price of XRP, you can see XRP has definitely not rallied as much as XLM, because before the rate hike action, we were sitting anywhere from 38, 37.5 cents, all right? So we've got a little bit more room to go with XRP. But again, the fear here, bad data from CPI. Definitely got to be warned about that. The Fed being behind inflation. No one can argue that. The Fed has been behind. They have underestimated inflation. While all of us here watching these videos have seen the price at the pump hurt us, the price of food, housing, rent, all that stuff has just destroyed us, where the Fed was like, yo, it's transitory. You'll be all right. The Fed has always been behind. So be very cautious here that this rally won't last, as we have several economic indicators, big ones, looming over the market right now that could completely crush this rally and send us back down. You could easily see XRP get back down to that 33.5, 34 cent mark, and you could easily see XLM testing that floor of that 7 cents. Yes, China opening up their economy is a good thing for the globe, because that means more money that can flow in. Think about the countries that are very dependent upon tourism. Yes, China tourism is huge with how much money it pumps into those economies, but it also has heavy effects on gas prices. That's why oil is starting to go up, because they know there's going to be increased demand with a massive economy like China opening up, things starting to move. CPI data, let's keep our fingers crossed for 6.5 or lower. Let's also keep an eye out to see what the Fed does at the end of this month going into February 1st when they announce their next rate hike. Earnings season as well is here, everyone, with banks coming out first, swinging, oh gosh, probably not some good results, which again could bring the market down. I'm being very, very cautious about this latest move right here, with Bitcoin going up over 17,000, ETH going up 1,300, with XRP and XLM also seeing relief as well. Super optimistic, because I think there is more pain to come when it comes to inflation, because as wages stay high, that means people can afford high prices. And greed is ruling the roost right now, which means companies know if people can afford it, they're going to keep charging more. So until wages come down along with employment, you could still see demand being high. With supply, well, they're not fixing supply, everyone. We know the issue, and they'll keep raking the consumers over the coals, making it worse out there for everyone. Now, as more news breaks, I'll be sure to share it with you. Until then, check out this in-depth crypto Web3 video right here, specifically made for you. Remember, we got the live stream on Thursday, so hit that subscribe button, like if you like what you saw in this video, comment down below. You know I'll read them, and sometimes I comment back if they're good enough. Until more news breaks, you cool cats, have a great rest of your day.